Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for August 10th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Where we last left off, we had a clear sell-off after prices rejected highs above the tightly coiled range. Price sold off and then bounced back just a little bit. And this is where I mentioned that it wouldn't be out of the question that we sling all the way back across to those highs and widen that range again. And that's where we kind of are right now. We're kind of sitting just above the 73s, 72s, which is a key level, trying to hold above that zone. Right now, this is the third day, or heading into our third day above that area. And typically speaking, what I'm looking for are signs that these stops, the sell stops below 72s, are going to come out. If bulls do not get paid and prices do not push higher up here, then sell stops below 72 become at risk, and we could be looking at another move back against the range. So short term, what we're seeing here is a continuation or an expansion of this tightly coiled range. You can see it right here. Basically an expanding range that continues to develop. We're sitting here at these highs. If the stops get hit below 72s, we could be looking at another push back toward 2140 and perhaps a little bit lower. But again, this has just been the nature of how this thing has been building out so far. If prices can continue to hold 72s, then the next upside key level, at least in this picture, would be 88.5 and perhaps as high as 2200. All right, let's take a look at the intraday time frame here. Looking at the intraday time frame and backing it out a little bit, again, you can see over the last couple of days, very clear support, 73s. And that's the support zone that we need to really be watching today. You can see it here, 73, 73, 73, 75. So very clear area support. We also have a clear area resistance, 83. So right now we have a 10-point trading range right now with some balanced trading range action. So I would say near the center of this range, not a whole lot of edge. You got to come up here toward 83, 84 and look to fade it back down. And bulls want to be cautious on the bottom end. But any rejections around 73s should be a buying opportunity back up. Expansion outside of this range could spark the next key move of about 30 to 35 points, so this could be very significant. All right, let's take a look at crude oil. Crude oil, here's a daily time frame of crude. This has been something that we've been talking about for a while. We had a significant sell-off, very, very significant sell-off. We reached 39s, and then we saw this major buy opportunity right here, or this major buying spree that basically came as a rejection of the previous session's lows. So that rejected the previous session's lows, and then price rallied and closed above the previous session's high. That's typically a recipe for the next bounce opportunity. And something I mentioned was it doesn't matter if it's a 1-day, 2-day, or 3-day bounce. You're likely going to see selling pressure at some point, which then pushes price back toward those 37s, which was the ultimate downside target, because it is the bottom of value. So the top of composite value, 50.23. We have composite VPOC at 45.60. And the bottom of value, VAL, right here is 37.27. So the expectation is that at some point we still come down here and reach the bottom of value and perhaps even see that LVN at 35, which could be the ultimate buying opportunity back up. So short term, this bounce was nice. Now we have to see how does this thing play out, because we're back above 42s. 42 is a very important key level, and prices are attempting to hold that zone. So we could see price continue quietly higher or build out above 42s, but once the stops come out at 42, that could be where we dump toward 37.27. So right now, short term, this could be another buying opportunity off of 42s for an attempt back up toward 43.50 and perhaps even higher. But we've seen price kind of stall here after periods of bounces for several days before the next sell-off occurs. So that could be the case yet again. Watch 42. That's going to be the key level. Let's take a look at the intraday time frame. Here's an intraday for crude oil. You can see again, here's 42s. 42 being a very important key level, a big time confluence zone right there as well. And prices have come back toward that zone and already bought in overnight trading back up. So right now the key level here is 42.75 on the top, 42s on the bottom. Any pullback to 42s could be a buying opportunity back up. Any push through 72, 75 could lead to a move back toward 43.50, and that could be a return back down. So right now, those are a couple of the areas that I'll be watching as we head into RTH. All right, let's take a look at gold futures here. Gold was significant here over the recent period of time, mostly because we got our rotation from the 1310 zone all the way up to the 1375s. Very, very significant rally here, right on up. What I mentioned before was that for all intents and purposes, reaching between 1370 and 1380, for all intents and purposes, that trade was pretty much done. There could be a little bit of juice squeezed out of the limit above 1380 or at 1380, but the risk at that point of buying was too high. And you could see clearly away this thing sold off right back toward the center of the range. The FOMC level being 1334.30. Basically, that became a nice magnet right there to retest price. And now we're bouncing back up. So right now, we're not really at a point where there's a lot of edge. Obviously, we have the edges of the range here. Selling above 1375 could be an opportunity to bring it back toward 1334s. Or buying it back in this LVN could be a great opportunity back up. But right now, in the middle of this range, not a whole lot of edge at the moment. And for the most part, we still have our D-shaped profile. So the expectation is that we're going to continue to trade in this range, but you've got to be patient about waiting for the edges. And we'll be watching for that as we move forward. Lastly, let's take a look here at the NQ. The NQ has been super, super bullish. Very strong. This one's had one-day pullbacks at the most, and every day after a one-day pullback, we've seen significant strength. Here's a one-day pullback, boom. Small one-day pullbacks and going. This one's a bigger one, and boom. It's not running away. This isn't running away to new highs like crazy, but it is just a steady push higher. So you really have to keep that in mind. After every pullback is likely a buying opportunity. Right now, we could be long in the tooth at these highs, sitting here for 3+ days. Any failure to hold 47.80 could be an opportunity to bring it back to 47.30. That's a key level below, and that could be a great buying opportunity for another round of strength above 4,800, likely into the next target, which is at the moment 48.34, and we have several more above. But right now, we got to see how price responds at these highs. If there's any failure to get to new highs, look for those stops to come out into 47.30, and that could make for a great buying opportunity on a swing basis. On an intraday basis, here it is. On an intraday basis, we've seen basically price hold near these highs for the last couple of days. Basically, here's 47.65, the top end of the range, 48.05, 48.10. And you can see how price has just been kind of going back and forth. So right now, near the top end of this range, 48.10, this could be an area to watch for a selling opportunity short term back toward 47.70. Any push into 47.70, 47.65 in that zone could be an opportunity to bring this thing back up short term. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.